welcome and thank you for your patience. You've seen the disclaimer, and as I said earlier, we will be doing a recording of this too, because people can't attend because of work commitments, and also where they are in the world, it's just not at a convenient time. Although I have emailed those of you that have had emails about the timings, and in subsequent webinars, we are going to mix it up a bit. So we'll put webinars on at what is afternoon, the New York Open, and perhaps even one late in the evening as well, perhaps towards the close of the US session. Anyway, thank you so much for coming along this morning. The title of the webinar, those of you who've obviously it's about market turns, and let me just pull up something a little bit more interesting than what's there at the moment. Let's pull that one up. Hopefully you can see this. Right, this is Talking Forex, so it just gives us a snapshot of what's been going on in the markets this morning, which we'll refer to later. Let me see. As I said, I've had a change of configuration of my screen, so everything is kind of back to front for me, and I'm right-handed, so it's causing me all sorts of problems. Right. Very, very briefly, because we have got some really interesting charts to show you. We've got some really interesting lessons, VPA lessons, and also some features of the quantum tools that we want to share with you. But I know it sounds obvious, but as traders, all we're always looking for is a market turn. And we're looking for a market turn in the sense that we're either looking for an entry, maybe we're looking for an exit, or we're trying to assess, if we're in a trade, whether the move that we're in is actually going to continue. Just bear with me a second. Right. Those of you who come along will know that we have a couple of little dogs who like to participate. Particularly, I think there was someone at the door, and so basically, as traders, that is what we are looking to do. Now, we do that in all time frames, whether you're a short-term trader, medium, or long-term traders. Now, with volume price analysis, if you've not come across it before, or maybe you've just heard the term, or maybe you've read some of my books, you will know that there are 5 elements to volume price analysis. One is obviously price action. Second is volume, support and resistance. We've got candles, candle patterns, and we've got time. And if you don't use volume price analysis, and you're just you've come to trading, and maybe you've been trading for a little while, the vast majority of traders, I can say with hand on my heart, will probably use some of the elements that are in volume price analysis. They will certainly use price action. They may even use support and resistance. And I use support and resistance here in its broadest term. And I'm using support and resistance. You could be using trend lines. You could be looking at Fibonacci. You could even be using maybe a 200 MA or a moving average, or use a candle pattern or an individual candle. You can look at a shooting star or a hammer, a double bottom, a triple bottom, a double top, a triple top, etc., etc. That's absolutely fine. But the vast majority of traders don't incorporate the volume element into their analysis to see whether a move in a market is now coming to a potential turning point, and they are looking for that turning point, as I said, either as an entry, as an exit, or whether an assessment to maybe join an existing move. And we'll talk about that later as well, which is a great shame, because the core, what sits at the heart of volume price analysis is this: if you use all the 5 elements in combination, is that what it does, it really validates what you are seeing on your chart. It either validates it, or it highlights the fact that you're probably going to be walking into a trap. And that is really what VPA is all about. Now, obviously, around the technical picture, we've got the fundamental picture, we've got what's happening in related markets, and what's been happening in the last couple of days with Donald Trump breaking away from the Iran deal. We've had missiles fired into Israel. We've had the oil price rising. There's the geopolitical aspects as well. We all start with the chart. Now, those factors we have to be aware of, but despite whatever is going on around you, what VPA will tell you is whether what you're seeing on the chart is actually valid or not, or whether you're actually walking into a trap. And what we've done with our tools, with the quantum tools, is really The tools have been developed to assist and to help us in these decision makings and help us with this validation. So we have the chart, and we have the tools, and that's what tools are there for. They give you the initial heads up, the initial signal. What you do with that signal is up to you. I'm asked this question all the time. They say, well, you can see on the chart here, if I can just point out to you, you can see these numbers up here. This is our Camarilla indicator. There's some kind of, there's a protocol to Camarilla. So when price, say, reaches an R3 or an R4, you're potentially looking for a breakout, a continuation of the move. Now, how you interpret that initial signal is a discretionary one. These tools, this methodology, is a system, but it is not systematic. It is not mechanical. You still have to make the ultimate judgment of whether to take that turn or not take that turn. So that's what I wanted to say very, very quickly, just to lay out a little bit of the background. I want to talk a little bit more about oil, because oil is really, really interesting, and also the US dollar. There's been a huge shift in what is happening with the US dollar for various fundamental reasons. And if you're not aware of what is going on with the US dollar, you possibly are maybe walking into one of those traps. But I'm going to pass over to David and see what he wants to say as well.
Hello everyone, and a very warm welcome. Hopefully you can hear me loud and clear as well. And if you can't, then you won't be hearing me anyway, so it's rather a stupid thing to say, but anyway, I hope you can. I'm just checking with Anna. Can you hear me okay? Yeah, fine, great. Thanks, Randall, appreciate it. We're just going to swap screens, and for those of you who've not joined us before, we predominantly focus on two particular platforms, MT4/MT5. If you have any of the quantum trading indicators, then you'll know that we've recently launched the MT5 platform, which is really an extension of the MT4 platform. I'm sure you're familiar with MT4 and MetaQuotes, and they've done a lot of work on MT5, and really MT5 takes it to the next stage because MT5 is a multi-asset platform. So for forex trading, it's a great platform because it also brings in, and it really embraces the relational aspect of trading, which we talk about a great deal and which Anna's touched on already. And the reason I've got the CAD yen up here is for several different reasons. But as I'm sure you're familiar with oil, it's certainly been pretty bullish over the last few weeks. There's always geopolitical events around it, which cause immense volatility. We've had Iran over the last couple of days, and it spiked down. It's now spiked back up again. And of course, a lot of that is reflected within the Canadian dollar and indeed other commodity-based currencies, but particularly the Canadian yen and also the Canadian dollar itself, of course. And the reason I just wanted to touch on this is because, as Anna said in the introduction, whatever we're doing, whether we are trend trading, whether we're a reversal trader, whether we are a breakout trader, whatever it is we're doing, we are constantly concerned about identifying reversals, but identifying reversals perhaps for different reasons. Now, this is a classic example of a trend that's been developing. We've been in the CAD yen ourselves personally for some time on the slower time frames, but this I've got on NinjaTrader, and this is the other platform we focus on. I've got four time frames up here. I've got the 5-minute top left, I've got the 10-minute top right, I've got the 30-minute down here at the bottom, and over on the right I've got the 60-minute. So this is quite a compressed phase of price action. And the reason I've highlighted is really this, that if you're a trend trader, you are certainly looking either to stay in this trend or perhaps jump into this trend at this point, or maybe you've been in it for a while, but your thought process all the time will be, even as a trend trader, at what point is this trend going to pause? And when it does pause and move into congestion, is that then a reversal? Now, you're looking at it from the perspective perhaps more of is this a time for me to close out? Is this a time for me to take my profits off the table? A reversal trader might be looking at this trend developing. They might be looking at the currency strength indicator, might be looking at the array, what's going on in the complex. They will have a completely different perspective on that. What they will be looking for is they will be looking for the opportunity to short this market. In other words, they will be looking for that reversal position to develop. They're not in the trend right now. They like to trade reversals. Equally, if and when this trend does come to a pause and moves into congestion phase, which ultimately it will, because all markets do, at that point, the breakout trader will be sitting in the congestion phase, patience, 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 waiting for the reversal to develop. So whatever your primary tactic, and those are the three that we talk about a great deal, which is waiting for the reversal, the breakaway, or jumping in a trend and holding a trend, your perspective on the reversal is always the same. That is what you're concerned about. If you're holding this trend, it is always the most difficult part of trading, is to hold and maintain a trend once it starts to develop. Because no trend goes up and down in a straight line, there will always be inevitable pause points. And one of the most powerful applications of volume price analysis is in the development of the trend, not only to help you to maintain a position in the trend, but also to help you identify whether a pause point and reversal is just simply a minor pullback or a minor reversal in the price action, or whether actually it is a true reversal in the primary trend. In other words, from a primary trend higher to a primary trend lower. And when we talk about primary trends, please don't run away with the idea that this is purely based on the hourly chart or the daily chart or the weekly chart, whatever it is. Time is relative. So if you're a 5-minute intraday scalping trader, then a primary trend on a 5-minute chart is just as valid as a primary trend on a daily chart or a weekly chart. It's just your perspective is entirely different. So it is one of the most powerful applications of volume price analysis, because what volume price analysis does at those points where a market pauses in a trend, as we are here, it does two things. First of all, it helps you identify whether we are actually reaching a major reversal, or whether this is simply a pause point. And the other thing it also does is, which is perhaps a bit more nuanced, a bit more subtle, if you will, is that volume price analysis translates, it moves your brain into an analytical mode. So when you're in a trend, you've got some decent profit in the account, and then the market pauses and it maybe starts to reverse, and you start to see what you'd already mentally banked in your mind, that starts to fall. And it's at that point that the emotion kicks in. And what volume price analysis helps you with, it helps you with that emotional response that is automatically triggered when you're starting to see something that you thought you had slip through your fingers. And that's the most difficult part of trading, because that's when the emotion is most powerful. Your desire is to close out. That's the natural reaction. It's the natural response. It's your emotional trigger to grabbing what you have and banking it and putting it somewhere safe. And sometimes there's nothing wrong with that. But what volume price analysis will do, it will help you to analyze that situation in a calm, logical way rather than in an emotional way. In other words, your brain is looking at the VPA relationships across the time horizons and helping you to make a much more balanced decision than one which is based on emotion. In other words, it's based on logic and analysis rather than on emotion. So it is one of the most powerful applications. And of course, you then have all the indicators to help you. And the other reason that I put this up is really just to highlight the trend monitor here, which, as you can see, is solid blue throughout this time spectrum of 5-minute right the way through to 60. Now, at some point, that is going to change. The trend monitor will move maybe into a transitional phase of color. So as a market pauses, it will maybe go to dark blue. It may go straight through to red if it's a full-blown reversal and there's a sudden reaction in the market. Maybe it will go straight through to red. It doesn't automatically follow the color sequence goes from bright blue to darker red, and ultimately into bright red with a true reversal in trend. If that's true, then that's what will happen, but it doesn't always happen in that particular way. So it's using the indicators. We focus a lot on the currency strength indicator over here. As you can see, we're in the CAD yen. The CAD, this is on a, what are we on here? We're on a 15-minute time horizon here. The purple line here, this is the Canadian dollar. And of course, I've got this set up on multiple time frames as well. We've got the Canadian dollar still rising strongly, still strongly bought. We'll be looking and seeing what's going on in the oil futures market, the spot price and everything else. And equally, you can see here, we've got the yen, which is diving very strongly. A lot of yen selling, and of course you'll be looking at this not only in isolation. In other words, you're not just looking at the CAD yen, you're looking at it across the yen complex to try and identify what is going on globally in terms of yen sentiment. In other words, is this yen sentiment across the complex? In other words, is every yen pair traveling in the same direction or not? And one of the ones that has been out of kilter, out of balance, if you will, has been the New Zealand dollar, because overnight we had some New Zealand an interest rate decision and also associated commentary from the central bank, and that has impacted the New Zealand dollar from a local perspective, if you will, rather than a global perspective. But as you can see here, the New Zealand dollar is rising very, very strongly. So we could hop over to the New Zealand yen. Don't even need to look at the chart in this sort of time horizon to know for a fact that we would have a strong trend developing on the New Zealand yen, because the New Zealand yen, the grey line, is rising very strongly, and the Japanese yen, the lilac line, is falling equally strongly. So there is a trend developing on this faster time horizon. As you can see, this trend is still continuing. There's very little at present to suggest that. Let me just pop this up full size just to make this a little bit more. Let's just pull that across so we've got a nice decent color spectrum there. And this is what I meant with the reversal. Just looking at the trend monitor, this was our bearish phase. We went into congestion here. The volume point of control, this solid yellow line, very similar obviously to the MT4, MT5 version. The trend monitor transitions, we go into dark red, we go into a darker blue, and then as the trend starts to develop, we begin to move into the brighter blue throughout this particular phase of price action. And of course, the other aspect to all this, we're looking at a 60-minute time frame here. And when we're looking at volume price analysis in that context, we've always got to factor in the natural rise and fall in volume, which associates the various phases of price action around the 24-hour clock. There's a lot of people who put out videos about trading forex. It's a 24-hour market and you can jump in at any time. Technically, that's true. Factually, it's rubbish, because the fact of the matter is, and it's very clearly demonstrated here. And the nice thing with Ninja is also, and it's a little bit frustrating on the MT4, MT5 platforms, what you find is it's quite hard to identify sometimes at the live edge of the market what was the actual time in terms of the local time you're trading. And what I mean by that is when you're MT4, MT5, you'll sometimes look at it and it'll maybe be 2 hours difference. And that's very much down to the servers and the brokers. When you're on Ninja, it's very easy, because this time here, which hopefully you can see just about, this is 8 o'clock. So this is 8 o'clock, this is UK time. So this is 8 o'clock UK time. In other words, the start of the London Open. And we go through this increase in volume here, and all this phase here from 10 o'clock here right the way through to 6 or 7 o'clock here. This is where Europe starts to open up. You can see the general volume here through Europe and Asia is pretty light. Then as we come to London, we start to see the pickup in volume. This is the US sessions opening up here at 1 o'clock, 2 o'clock UK time. This is the early afternoon now for us. And then gradually throughout the US session, you see the falling away in volume, which is natural because London's starting to close down around here about 5 o'clock. In we go into the evening session of the US market for us. 10 o'clock, this is UK time. So the US market closes here, talking about the cash markets now. The forex market closes over here somewhere. And then through we go into another Asian session where again you see this fall away in volume. So you've always got to be aware of that. It's very easy to look at a chart And particularly so when you're on the slower time frames. Once you start to move beyond the hourly, you've always got to be aware of the fact that session volumes will automatically rise and fall, a little bit like the tides. They are relentless. They will rise and fall throughout the 24-hour phases. It's exactly the same with volume profiles. And as we're coming into London now, we're starting to see, this is Europe, we're starting to see London volumes coming in, and we're starting to see a continuation of the trend. And what we've got here is a nice phase of congestion built up through this period overnight, and we're starting to see the development, nice volume here, nice widespread up candle, no wicks at all to speak of. And of course, you'd be looking at the rated markets, you'd be looking at this in different time frames as well. Very little in terms of volume, resistance on the volume point of control ahead. So from a volume perspective, where the volume point of control looks at, it embraces time, because what you're looking at on the volume point of control here is, on the histogram, is support and resistance through the prism of volume. Because what this does is the volume point of control embraces volume, price, and time. When you're looking at these relationships down here, you're looking at a linear relationship, if you like, between a volume bar and a price bar. Is it in agreement? Is it in disagreement? If so, what's it communicating to you? And then you start to look at the pattern of volume, the relationships of volume and price. What is that telling you in terms of what has gone before in groups of candles, groups of volume bars, and so on and so forth? And what we do with the volume point of control is to swing it up onto the y-axis of the price chart, where we're embracing time. So the longer a period of price congestion develops, as here, for example, then you expect to see deeper volumes of congestion building in this region. And of course, the deepest of all is around about the volume point of control, which is the fulcrum of the market. And this moves all the time. This is not a static thing. As these develop and change, so the volume point of control itself will move to the next phase where price agreement is being reached. So up here, for example, if at this point the market decided to move into a congestion phase, then if it were there for long enough, which brings in the aspect of time, then the volume point of control would ultimately move up to demonstrate the development of volume in that region. Now, from a trading perspective, as you can see here, we're moving up into a very light area of volume. And the key is this, that as forex traders, and indeed any traders, whether you're an investor, trader, whatever it is, it doesn't matter. What you're trying to do all the time is anticipate market direction. And what the volume point of control gives you from a volume perspective is whether you've got high volume nodes or low volume nodes ahead of you. And this is what this is telling you. This, for example, here, as the market broke away, we'd be looking at the volume relationship and the price relationship. But what we'd also be looking at is these volume nodes, because if you're moving up into a region of low volume activity in the past, then the expectation, your anticipation is that the price action is going to move through there pretty swiftly. Why? Because there's little in the way of volume to actually cause the market to pause. That's reason number one. And reason number two is a little bit more subtle again, is this, that if the market considered this area of price unimportant in the past, then why should it consider it important in the future or in the present? So it's a double aspect relationship where you're looking at it from the perspective of the concentration of volume and the anticipation of price action when it arrives at these regions. And secondly, the volume histogram also describes the importance of those regions to the market, whether they were important in the past, in which case they may well be important in the present time. And of course, for example, if this market suddenly took a nosedive and came back down to this level, you've got this big volume here. If we move back to the volume point of control itself, then your expectation at that point is that the market at the very least will pause. It's very unlikely the market would suddenly crash through this region unless there was some cataclysmic event, unless there was some volatile piece of news. For example, Iran, where you would have seen very volatile price action. I think oil prices fell something like $2, $2.30, $2.40 within a very short space of time, but then bounced back again. So it's putting all this together with volume and helping you to identify the reversal depending on what it is you're trying to do as a trader. and your view of that will be very different. So I'm just going to close that one back down to full size. Just see what's going on at the moment. Just coming over onto the faster time frames. What's interesting now, and this is using a multiple time frame approach, is just classical. It applies not only to the charts, but it also applies to the indicators themselves. So when you're looking at the currency strength indicator, for example, it's multiple timeframes. The array, multiple timeframes. The matrix, multiple timeframes. This is what it's all about. And the reason for that is that, for example, and this is another nice example using a different indicator. Here we are, we're on the 60. That was the chart I was showing you a moment ago on the 60-minute time horizon. Now, if you're trading the 60-minute time horizon in isolation, you may well not be aware of the fact that right now on 3 time horizons, fast time frames granted, but on the 5-minute, the 10-minute, and the 30-minute, we've now got these little triangles top and bottom, which are signaling volatility. In other words, for whatever reason, we've got something that has caused a reaction in the market, and volatility and the insider participation or lack of participation go hand in hand, which is why volatility is so important. It is the point at which the market makers, the insiders, will manipulate prices or they will participate. And volume reveals what is going on. But also, moreover, what tends to happen with these price actions is that when you've got volatility in the market, the anticipation, the expectation is that the market is likely to reverse back inside the spread of that particular candle. Maybe a short period of congestion, it may not. It doesn't always do that. There's no always in trading. But what it gives you is really back to this fundamental question, if you will, because now, as a trend trader, when you see this volatility appear, your question is now, is this market going to pause? Is this market going to reverse? So it comes back to this all the time. You are constantly thinking about this issue of a reversal. Is the market going to reverse or isn't it? What is it going to do next? I want to hang on to what I've got in here. It's a really nice trend developing. There's nothing at the moment to suggest that this is going to reverse, other than we've now got this volatility triggered on 5, on 10, and also on 30. So it's a warning signal to be careful. Now, at this point, and I've said this many, many times before, if you're in this position and you've got some decent profit in the account off this trend, your decision at this point may well be to close out. Generally speaking, that's what I would do. I'd bank what I've got, put it to one side, because you can always jump back in again. If this market does not reverse inside this particular spread of price, that's fine. If it clears it on good volume, terrific. You can just jump back in again, and you've lost nothing. What have you lost? You've lost maybe, I don't know, 10 or 15 points in the trend. So what? You jump back in again. And that's really what it's all about. It's really putting together all these different aspects of using the indicators, volume price analysis to help you, getting a sense of what is going on in the market, and constantly being aware of the trends that are developing and the potential for reversal. And whether you're looking at that as a reversal trader, whether you're looking at it from the perspective of a trend trader who's wanting to make sure they maintain a trend for the longest possible time, and so on and so forth. So you can see up here, for example, over on the CSI on 15, for reversal traders, the euro is selling off very strongly right now on 15-minute. The pound, the yellow line, that's selling off pretty strongly as well. But the Canadian here, you can see it's still climbing, still buying. The yen down here. And that's how to use the indicators. You're seeing the volatility coming in here. We've got another volatility trigger coming in here. But at the moment, the CSI is continuing to help to keep us in the trend for the time being. Let me pass back to Anna. I've talked for a long time, probably longer than I was expecting, but let me pass back to Anna for a moment.
We'll come back to you, Dennis. David will walk through the dashboard with you. I just wanted to put up one of my cable profiles where I've actually set it up with a currency strength indicator here on the left, and I've actually got a Renko which is set at 2 pips. I've got the 3-minute, I've got the 12-minute, and I've got the hourly chart for a little bit of context, because we were talking about turns and whether it's a valid turn or not, and whether that's going to give us the opportunity to take a trade. And this is just a really nice example, because from a sort of technical perspective, it all looks, you say, yeah, we've seen certainly on the, let me pull up the 12-minute chart here. You'll be looking at that, and you would see this wick to the bottom of this candle here, where you've got a lot of buying coming in here, and you could forget that it's the London Open, forget that the volatility trigger has triggered the volatility. So these are the little purple little purple dots here. Stripping all that aside, you would say that would possibly be a perfectly valid opportunity to take a trade to the upside, because you've had price fall down quite sharply, you've had a lot of price support come in, and the buyers have, if you like, let's take the buyers have stepped in and pushed the price higher. Now, if you were short, for example, if you were already in this particular move here, you go back to this candle here, where you have a sort of a doji candle, not a lot of volume, a reasonable amount of volume. And this is where you have to really consider this in the context of where you are in this 24-hour cycle, as David said earlier. We really can't stress enough, even if you don't use volume as part of your analysis, just on the price action. The price action, you would look at that and you think, a lot of people look at a doji candle and say, oh yeah, that's a potential turning point, a potential reversal. In fact, the price carried on lower, and then just as the London Open came in, it went bang. What this volatility does at the beginning, at the crossover, particularly with London, I would say more so with London than with New York, is that is where a lot of traders get trapped. They have seen the preceding moves, which were very nice, thank you very much. It carries on, and they think, there's going to be a follow through on that. Suddenly, the inrush of activity causes the volatility. What happens with volatility most times is when you get that additional activity, it is a perfect time to lay these traps. We know that there was likely to be a trap because our volatility indicator told us so, and we would know anyway because it's London. And what tends to happen, the price then reverses back into the spread of that candle. So rather than seeing that as a continuation, and there was a reasonable amount of volume coming in to show that this is buying, it has to be buying because of the volume that is underneath. And now it is setting up for a potential trade to the upside. And in terms of your entry, and people say to me, but where do you, what do you look for in terms of an entry? And this is where whatever indicator you use to help you to time the market, if you like. If you're on a 5-minute chart, you'd be far better off looking at an indicator on a slightly faster chart, because indicators always lag. All indicators lag. The only two indicators that don't lag, one is price action and the other is volume. So you perhaps go down to a faster time frame. What this tells us on the 3-minute on the CSI, we could see with the yellow line that it was so overextended that possibly there was a potential turn coming, on the horizon. When we move to a faster time, we've got the 3-minute chart here. All this price action that we see here, all this, my screen's gone, I think you can still, all this price action here is actually contained in this wick of this candle here, which is why you need to look at multiple time frames. And you also have to have a time frame for some context. And what we can see here with cable, this is the hour, this is the move lower, and now we're seeing a strong move higher, and we're seeing the actual buying coming in quite strongly. Now, in terms of your entry, if you're down at this type of at this level, I'm not saying ultra fast, but this sort of short term, you're only looking for a handful of pips, as it were. This is where you have to use maybe something like a Renko. This is set to 2 pips. What we can see here, this was the move lower. This was sort of the volatility and the consolidation as well that we saw within the spread of the candle. Now we're looking to move strongly higher. Where would you like to sort of think of getting in? If you have the indicators, you can perfectly well use the trend dots to help you make a decision. Or if you don't, you go back to maybe using support and resistance. And rather than perhaps look at a market order, look at a limit order. Go back and use very, very, the elements of VPA that all traders use, which is support and resistance. And whether you use support and resistance from a Fibonacci perspective, or whether you have an indicator such as this from us on the support and resistance line, you say, okay, I think that's going to go up. I'm going to put a market order in. And the lines will then tell you, well, where is this price likely to be moving to? Well, the lines tell you, where is it going to pause? That's the first question. So you can say, yeah, if it gets there and it's going to go through there, maybe I'm going to put my order somewhere up there. And if it doesn't get there, and this is just a minor pullback, and it's not going to go very far, what have you lost? You have lost nothing. But if you want to take it as a market order, market orders, I think, are traders who use market orders, I've found, or David and I have found, we tend to be a little bit more, would you say more aggressive, David? You kind of more tracking the market. Not that we don't consider, we don't take a considered view. We just want to get in there, make the pips. If we're right, we're right. And if we're wrong, we're wrong. But there's nothing wrong with limit orders. And certainly if you're time poor, then analysis of the slower time frames, you would have to use limit orders anyway. So, sorry, my screen's there we are. That's just flashed off again. So that's what we would be looking at here. The Renko would tell us when that turn is likely to happen. We have a consolidation. As always, we have a consolidation, and then we have a move away on the reversal. The reversal signaled here on the slightly slower ones. Why? Because we've got these wicks to the bottom of these candles. We've got some buying coming in, and on our indicator over here, I've got it down set to the 3-minute. You can see here there is obviously some buying of the British pound coming in. And just to remind you, in case I'm sure you know already, it's an important day for the British pound because we've got the Bank of England interest rate decision later on today. We've got the voting pattern to see who wants to raise rates, who doesn't want to raise rates, and we talked about the importance of understanding who's who on the central banks, but much more importantly, where they sit on the doves and hawks scale. And I'm just going to drag over here, and it's very nice with Talking Forex. They actually help us, because when one of these characters actually speaks, here we have the ECB lane, and they actually helpfully tell us he's pretty dovish. So if he says something that is contrary to what the market expect him or her to say, that's when you get additional volatility. And with the Fed as well. The Fed members, some have a vote and some don't. So people who don't have a vote and they say things, the market says, oh yeah, that's awfully interesting, but you're not really going to influence any major decision because you don't have a vote. But if you have a vote and you say something and it seems contra to their perceived position on their attitude to monetary policy, that is when the market will pay very, very close attention.
Just switching screens, we also killed the sound because I'm sure you don't want to listen to our two dogs barking their heads off. Apologies about that. We are back on air. If you come along regularly, they are a fact of life. We love them to bits, but occasionally they can be a bit annoying. But they're two very small dogs, and we love them dearly. So there we go. Let me just try and answer Dennis's questions, if I may. I'll just run through the dashboard as well. In fact, I'm going to do it back to front because I'll start with the dashboard itself. Sorry, beg your pardon, the currency heat map. The currency dashboard is It is precisely that. We've basically put together 4 indicators which we think offers fantastic value for currency traders in terms of a bundled approach. And it is a dashboard. It's like a flight cockpit, if you will. It's the cockpit of your trading view. And it's constituted of the currency matrix, the currency array, currency heat map, and the currency strength indicator. And those 4 are bundled together into what we call the currency dashboard. You can buy them individually, of course, but the dashboard is a great deal. In terms of the dashboard and the numbers and what they mean, the numbers themselves, and these numbers are also derived from the currency matrix as well. What we had to develop in terms of creating these indicators was really just a mechanism to visually show whether a currency pair was bullish or bearish. And to do that, we obviously derive this data, which is presented on the cell. So the question, I guess, is, what do these numbers mean? The numbers per se are not that important. And when you look at the heat map in context, and also I'll explain it a bit more when we look at the matrix, but the numbering system is really just there to help to identify how far bearish or how far bullish a particular currency pair is. And as you use this more and more regularly, and this is something we always say with the matrix as well, you will start to get a sense of when a pair is at or is it approaching an extreme. It's very easy with the currency strength indicator because we can do that visually. It's more difficult with the currency pairs themselves. So when you're looking at the currency matrix and when you're looking at the heat map, it's just trying to get a sense of how far away from the midpoint, in other words, where the currency pair will move from negative to positive or positive to negative, and thereafter how far away it is. So that's a way to look at the numbers, and you'll very quickly pick up how far bullish or how far bearish a particular currency pair is. And I'll explain this a bit more on the matrix. The purpose of the matrix is really much more to show you whether a pair is bullish or bearish across the entire array of time. And as you can appreciate, this then influences where currencies sit. Now, if we go down to the bottom here, for example, this ranking ladder is derived from these values which appear across the time horizon. And if we take the Swiss yen, for example, this is actually a good example to start with, because what you're seeing here is you're seeing bullish sentiment from the 1, the 5, the 10, the 15, the 30, the hourly, right the way through to the 4-hour, which is quite interesting. So the question is, well, why is the Swiss yen still at the bottom of the ranking ladder? And the answer to that is, well, the fact of the matter is that when you look at the daily, the weekly, and the monthly, they're all bright red. And then the data here is very negative. It's very heavily negative. You would not expect a move in the 1-minute time frame or the 5-minute time frame to have a greater impact than the impact, the weighting, if you will, of the daily and the weekly and the monthly. If you've got a currency pair that is massively bearish on a monthly time horizon, then quite frankly, whatever is going on down in the 1, 5, 10 or 15-minute time frame is not going to impact that greatly. What is going to start to impact that is when you start to see the data here falling. In other words, what you start to see is this green color extend through into this. Now, this has obviously got some way to go because it's minus 113. So we've got to get back to 0 before we start to see green appearing on the daily time frame. So you know for a fact, without even looking at a chart, the Swiss yen chart right now, certainly on the slow time frames, is very bearish. And obviously you'll be looking at this in the context of VPA and everything else. But for the time being, the Swiss yen is firmly anchored at the bottom here. And until we start to see a semblance of green appearing over here on these very slow time frames, then you're unlikely to see this currency pair move off the bottom. The same is true of the Aussie yen. It's been beaten down. The data here is slightly less negative on the daily. We're starting to see, in other words, we are starting to see some bullish momentum begin to develop, but it's not sufficient at present. We've got it pretty strongly in the 4-hour, and if that does ultimately develop through into the daily, and we see this number falling all the time, then that will be indicated on the daily chart and perhaps onto the weekly with some up candles developing, and maybe there's been congestion and we're starting to see a move away from congestion on these very slow time frames and the consequent change in trend. And the way to think about the heat map is very much in the way of ripples in a pond. We've used it many times, the analogy. And it comes back to the whole issue that really this webinar is about reversals, because when a reversal starts, it will start in the fastest time frame and ultimately ripple right the way through across the time frame into the slowest of all. And to take this example, if you were trading this as a much longer term reversal trader, then you will be waiting for this to extend right the way across the bottom here and out into the slower time frames. So the ranking ladder here is really, it's to do with weighting, because these slower time frames out here will carry more weight. That's the way we've created the heat map, because they have to, because their dominance, their impact, if you will, on the sentiment towards that particular pair is much more impacted by the weighting of a daily or a weekly or a monthly or a 4-hourly than of something that's going on a 1 minute or a 5 minute time frame. And I'm sure that, when you think that's common sense logic, it has to be that way, because otherwise, if it weren't the case, these would be whizzing up and down the ladder every 5 minutes. They don't. They move up and down from time to time. But this ranking ladder is a much, much slower perspective, because it carries all the weighting across these slower time frames, which are then translated into this ultimate ranking ladder. Now, you can look at the ranking ladder certainly from a slower perspective, whereas we look at things like the currency strength indicator, the matrix, the array, we're very much looking at those on an intraday perspective, scalping, or slightly slower trend or reversal trade, whatever it may be. When you're looking at the ranking ladder here, this is a much slower perspective. So if your perspective is to trade on a much slower time horizon, maybe you're at work, you're busy, whatever it may be, the heat map is a great way to do that, because it starts to give you extremes. It starts to tell you, for example, the pound Swiss. Why is the pound Swiss up here at the moment? Well, probably for the same reason that Swiss yen is down here. You're seeing across the top here, you can see here we've got very bullish sentiment on the weekly and the monthly. It's a little bit spotty across the top here. What's interesting about this particular pair now, and of course we've got the pound data coming out later today, so that's going to impact all the pound pairs universally. But what's interesting here is you're starting to see a little bit of bearish sentiment develop, particularly on the daily. So we've got some quite strong bearish sentiment developing there. And this is another way of using the heat map. You're really looking at it to try and identify this rippling of trend. What is going on? What is going on my, my Euro Aussie? I'm seeing bearish sentiment here. It's extending right the way out to the daily. I've got a tiny bit of bullish sentiment here, but ultimately it is bearish up to the daily. But over on the weekly and the monthly, we've got very strong bullish sentiment because it's bright green. So you're literally looking at the heat map in that way. Don't get too hung up about the numbers. I'll come on to the numbers in a moment on the matrix, but please don't get hung up too much on the numbers. And the numbers are really there just to help to guide you in terms of extremes. So let's go on to the matrix. Just move on to the matrix, which I've got here. And it's a very similar situation. There we go. What I've done here is actually isolated out. We're down onto the fast time frames now. And I've isolated out onto these yen because the yen is the easiest one to demonstrate. It really does show when the yen is being universally bought or the yen is being universally sold. And again, here you can see the data up here. When you're using the matrix, as I said earlier on, when you're using it, you will very quickly get a sense of, is plus 31.72 getting to an extreme, or have I seen on the 5-minute matrix, have I seen 40 before, or have I seen 45 before? And really that's what it's about. One of the things we are looking at in terms of the matrix is maybe trying to come up with some sort of little table or guide which will kind of say, well, this is an extreme level, so 35 or 40 on a 5-minute time frame is perhaps an extreme, etc., etc. It's one of the things we've kind of got in the background. So that's the matrix. Again, it's multiple array, multiple time frames. You're looking at it 5 and 15. What is happening to the yen at the moment? As far as we can see, you know, certainly CAD yen is the strongest and it's remaining the strongest there. So the trend is still very much in play. The bullish trend, you can see it's being joined there by the Aussie and New Zealand yen. So there's lots of yen selling going on across the complex right now. Jump over onto the currency array. There we go. I've just got a couple set up here. Reflected there as well, when you move to the array, what you also get associated with the array is not only the ranking ladder, we get trend and momentum visuals, so we can see how strong that trend is. We can also see whether the buying or selling of the yen is universal again along the complex. So we want to see all these yen pairs together, and we also get on the second ladder here, we get a sense of when a currency is approaching an overbought or an oversold state. You can see here when they go to bright blue at the top, the CAD yen and these other two are approaching overboard. It doesn't mean it's ready to roll, but it's just giving you a heads up. Down at the bottom, we've got the New Zealand CAD, which is now approaching the oversold, but it's in brackets. And when it's at a potentially oversold condition, it goes to bright red. So that's an advantage of using the currency array. Not only does it give us those overbought, oversold regions, or oversold signals rather, on the array itself, it also gives the ranking, and it also gives a sense of trend, momentum, and strength in that trend. So it tells you an awful lot of things. And finally, of course, over onto the currency strength indicator, multiple CSIs, there we go. Got these set up on 5, 10, 15, over to 30. And there you can see this continual strength in the CAD for the time being. Got a little bit of a kick down here, still strong on 10, strong on 15, still strong on 30. What's the yen doing? Sell, 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 sell. That's the way to use multiple timeframes. That is the currency dashboard. It's immensely powerful, and you get all 4 indicators on the dashboard itself. Just going to pass back to Anna.
Right, the question about when you see the indicators on different platforms. David is a Ninja platform, and it's a different data feed. I don't know if you're on an MT4 or an MT5. They'll never be absolutely identical, Dennis. If it's wildly out, then perhaps you could send a screenshot over, and we will just have a look as well. And the one thing David didn't mention is you can actually change the look back period. The default is 7, isn't it, David? Yeah.
On another time frame in there as well.
And also with NinjaTrader, there is an extra time frame in there as well. So you are going to get a slightly different, a ranking, if you like. Thank you, Dennis. That's very kind of you to say so, that you love the indicators. That's brilliant. But as I said, so that would obviously make a difference. And certainly, I mean, I run both MT4 and MT5s, and we always keep a check on, because data is, and I have different platforms, different brokers as well, and they pretty much are consistent. If you're comparing apples with apples, if you're comparing 3 different MT4 platforms and different MT5 platforms. So that's really what you have to be aware of. I actually sometimes take the look back period down to 3. And it's just something I've been playing around with. There's nothing wrong with you not playing around with these indicators. We've tried to make them as flexible as possible, and you really have to make them work for you, really, and just see what works. Try them out on a demo platform, and as I said, what works for me. I found the 3. It was just helping, and it was just picking up. You've basically speeded it up. All right. What I wanted to move over to, I've actually got the Canadian dollar here, because we were looking at. If I just bring up, right, this was the move that we were seeing in cable, which was rather sort of boring actually, because it's pretty much in kind of a congestion because of what's happening on the. With the there's the BOE coming in later today, so we had a bit of a move, as we always do, a bit of a trap move that we always have at the London Open. And you can see there because the other thing the Renko does, it gives you a sense of momentum. And if I just put that down again there, what it also tells you is whether there have been moves, and sort of fairly reasonable moves, but there's been an awful lot of congestion. This is what it picks up. The trend monitor is also picking it up as well. It keeps going, flip-flopping backwards and forwards. And what this also tells you is if you're going to take a turn based on the use of indicators, based on VPA, based on your candle patterns, based on whatever criteria you use to analyze your chart, when you look at the chart on different time frames and you expand it in this way, so what you also have to try and assess all the time is, what is the risk on that trade? You know, this move here, moving back to this part of the chart, now obviously in hindsight, that's a nice steady move. We had a little bit of a pullback and then it carried on higher. But then look at what happened after that. We had a lot of choppiness. Markets chop about and they stay in congestion a lot longer than they actually trend and move in a nice smooth way. Now, what's happened here, back to cable again, we've had another volatility trigger, this candle here. This was the move that we thought maybe would be, be a nice move, little move to the upside. But look at it in context of where it is on the chart. That's hopefully that will expand. It is actually in a congestion period, and with the volume point of control, it tried to move away. It didn't, push back up there, and it's basically chopping about in a reasonably wide range, because if you look at the range of the candles here, admittedly this was in the Asia session, and we had some little moves here as well. What this also tells you, what you also have to factor into your assessment, is the risk on any trade that you are likely to take. And that is the most difficult risk to assess. The risk of how much money you want to lay out, that's easy. That's am I going to put down 1 micro lot, 2 micro lots, 3? That is going to be part and parcel of your money management. What is far more difficult to assess is the risk on that trade. And what you have to bring into that assessment is you have to take a broader view of the chart. In other words, is the price action that you're looking at the moment, what is its context? Is it within a fairly choppy range, or is it in congestion, or is it actually maybe the turn is coming after a fairly strong move? And maybe this is now setting up to, the pound is actually now going to be selling off once again. And as I said, whether you use the market, and maybe this is where the use of market orders and limit orders. So possibly if the risk is a little bit higher, higher because there's a lot of choppiness, this is possibly maybe market orders, limit orders are the way to go. Market orders, you could go in, you get stopped out, and getting stopped out all the time, it can be very, very disheartening and very, very dispiriting. But I wanted to have a look at the Canadian, the dollar CAD, because we've had momentum. This is the trend. This is what I mean. This is where you have people use the trend is your friend and all this. I actually like to use the expression cleaner moves. The market has developed a sense of momentum, firm direction, and they do happen. They don't happen, as regularly as we would like them to do. But if you understand how to interpret chart structure in terms of congestion, using support resistance, using your candle patterns, then you can pick up these moves a little bit more easily. And my last comment about the dollar CAD is this: we've been looking at the Canadian dollar with the Japanese yen, and obviously the Canadian is connected to oil prices. I said very, very early on in this webinar is that there's been a big shift in the markets in terms of the attitude towards the dollar. The dollar is very strong. The king dollar is back again, but we also have to look at the dollar now as a petro currency. US is actually a net exporter of oil, and that is going to also impact its role within the financial system. I'm not going to go into the politics of what Donald Trump may or may not have done, and the reasoning behind all the politics and with Iran and Saudi Arabia. But what has been happening in the last few days is going to have a seismic shift in the markets, and you really have to be aware of that. And in addition, there are lots of other fundamental reasons why the dollar is strong as well, and it's going to have an impact on emerging market currencies. So please, we've said this before, politics, not only do we have the technical picture, the fundamental picture, but we also now have to have the political picture and what these characters are actually doing and what is their end game. And, that's what makes this market so much fun, basically. Right, very, very quickly. I think we're going to stop there. Is that okay, David? Unless there's anything you want to add to that. That's lovely. Very, very quickly, just in case. Where are we? Right. This is where we are. We're actually broadcasting to you from this particular setup. I think we've slightly changed our desking configuration. This is our complete forex trading program. If you have the complete package of indicators, you only pay the difference of about $497. The package is for either MT4, MT5, or Ninja Trader. There are videos. It's a self-directed, self-paced. We have a Facebook group called Trader Chatter, where we support all our traders. And these are the modules that form part of this program. As you can see, these are what we call the foundation modules, and this is the VPA chart examples, how to use the indicators, pulling it all together. We've got webinar recordings. There is a lot of material here, but by the end of it, you really, not only do you have a strong grasp of technical analysis based around VPA and the Richard Wyckoff 3 laws, you also have knowledge and information on the fundamentals, the psychology, and really everything you need to know to be able to trade and invest to be honest, in any market. This is obviously geared towards a forex trading, but this information that is back here is applicable to all the markets. And you can, there's the prices, there we are, there's other prices there that you can find. And with the indicators themselves, the individual indicators, you can buy them individually or as a package. If you head over to quantumtrading.com, all the information is there for you as well. And as I mentioned before, the way we operate our business, you can buy them individually. If you then want to upgrade to the package, you will obviously be credited. And our business model also includes that whenever we develop new indicators, and we are all the time, if you've bought the package, they are automatically added to your package. You don't ever have to pay us any more money. And that's my own site. If you want more about VPA and also the actual examples, these are all the books now that are up on Amazon. David, is there anything else you want to add to that?
No, that's it.
That's it. All remains for me to say is thank you so much for coming along. I hope you've enjoyed it. Are these indicators for the MT4 platform? Do we have to purchase? No, they are. The indicators, the quantum indicators, are indicators that we have developed. We actually developed them for our own trading and to support volume price analysis. Obviously, the volumes indicator just comes as standard on the MT4 and MT5 platform. So, but if you want more information, then just, as I said, drop me a line, anna@annacooling.com. Have a great day. Markets are certainly lively at the moment, and I hope you manage to take lots of pips. Take care. Bye.